Hello friends, good afternoon and welcome to Super Coaching Regulatory Bodies by Testbook, and also welcome to the series of Ecologics, where we are discussing the most important concepts of economics which are very important for the regulatory bodies examination as well as all those examinations wherever economics component is there. So the topic that we are going to discuss today is the marginal standing facility and the standing deposit facility. So we have started the discussion around the monetary policy a few lectures ago, and we have discussed about the monetary policy and monetary policy committee. We have also discussed about the different types of tools available with the Reserve Bank of India, through which it can definitely manage credit supply and interest rate in the economy in order to achieve the ultimate objective, which we have already discussed, that is managing inflation in the economy, maintaining price stability in the economy, as well as number second is the ensuring economic growth in the economy. So in this context, we have already discussed the cash reserve ratio, the SLR. We have discussed about the repo rate and reverse repo rate in yesterday's lecture, and today we are going to discuss two more important tools, that is marginal standing facility and the standing deposit facility. So let's start without wasting much time. But friends, before starting, one important announcement here, that you know very well the weightage of current affairs has been increasing over the period of time in the regulatory bodies examination, and it is becoming one of the most important component in the regulatory bodies examination. So we have started a current affairs series for you, which is a completely free of cost. So this will be on our YouTube channel. So here you can see the entire schedule, because you know current affairs in the regulatory bodies examination has huge weightage, where PIB current affairs, finance current affairs, RBI updates, government schemes, ESI current affairs, important reports, all these areas are covered. So that is why we have started this initiative, so that we can cover all these areas in your for the examination of regulatory bodies. So if I share the schedule with you, so here you can see PIB current affairs session is conducted on every Monday at 6 p.m. by Prakash Sir. Finance current affairs session is conducted on every Tuesday at 6 p.m. by Madhav Sir. RBI update session is conducted on every Wednesday at 6 p.m. by Madhav Sir again. Government schemes session is conducted on every Thursday at 6 p.m. by Prakash Sir. ESI current affairs is conducted on every Friday at 6 p.m. by me, Prakash, again, and important report session is conducted on every Saturday at 6 p.m. by Mahesh Sir. So this is the entire schedule which according to which we are conducting the current affairs session, guys. These are very important. You have to attend this. Reason being, in these sessions we are not only discussing about the important current affairs, rather we would also be discussing about why any particular current affairs is important and what dimensions are important, what dimensions you can skip, so that when you start the self preparation, you have the idea that this much you have to cover and this much you can skip. So in this context, these sessions are going to become very important. So moving ahead with respect to the today's content, that is quantitative tools of monetary policy, friends. So we have already discussed about the CRR, we have discussed about the SLR, we have discussed what is repo rate and how RBI uses the repo rate. We have also discussed about the reverse repo rate. So today, the two important tools that we are going to discuss, that is standing deposit facility and the marginal standing facility. So we would be discussing what are these tools, how RBI uses these tools, and why RBI uses these tools in order to achieve the ultimate objective, how by using these tools, ultimate objective of the monetary policy is achieved by the Reserve Bank of India. So moving ahead, let's begin with the marginal standing facility first. So friends, marginal standing facility is a kind of penal rate at which banks can borrow on an overnight basis from the Reserve Bank of India. So if I give you the examples, in yesterday's session when we were discussing the repo rate and the reverse repo rate, so I told you how repo rate operation is conducted basically. So here you can see there is a Reserve Bank of India and there is a Punjab National Bank one side. We have taken example yesterday. So whenever Punjab National Bank is in need of funds, so what they will do, they can go to the Reserve Bank of India and they can ask for the funds from the Reserve Bank of India, and Reserve Bank of India can give it the cash, right? But it is not the free of cost. RBI will charge interest rate also. So Punjab National Bank will give basically the interest to the Reserve Bank of India on the money borrowed, and that is the kind of basically this interest is known as the repo rate, right? This we have discussed. And also along with that, what PNB will do, PNB will keep government security as a collateral. This we have discussed in the case of this we have discussed repo operation, right? But when you see the marginal standing facility, the entire process is same. Whenever banks exhaust their limit of repo, then they go for the marginal standing facilities, because this is a kind of additional facility that commercial banks can avail in order to basically have excess borrowing from the Reserve Bank of India. And that is why Reserve Bank of India imposes penal interest rate, because banks have already exhausted the repo limit. So everything is same in the process, except the one thing that here no collateral will be involved, right? So here you can see RBI and PNB. Then here you can see movement of cash from Reserve Bank of India to Punjab National Bank, and in turn Punjab National Bank will pay the interest. So this interest is known as marginal standing facility rate, right? So यहाँ पे ये interest charge करता है Reserve Bank of India, and there is no collateral involved in the marginal standing facility operation. So this is the basically repo. First one is the repo, and second one is the MSF. All the things are equal except these things, right? So I hope you are getting it. So important thing that you have to understand is that is the penal rate of interest. And why it is a penal rate of interest? Reason being that it is basically used by the commercial banks when they have already exhausted the repo limit. Then only they are using the marginal standing facility, and that is why RBI is imposing the penal rate on them. Got it? So that is a penal rate at which banks can borrow on an overnight basis from the Reserve Bank of India. This is a safety valve against unanticipated liquidity shocks. Suppose banks are in the urgent need of funds and they do not have liquidity, so they can avail the option of marginal standing facility. So this is a kind of safety valve that is available with the commercial banks, and it is always placed at 25 basis points above the policy repo rate, which means if repo rate is suppose 6%, then MSF will be 6.25%. So this is always placed 25 basis points above the policy rate. Why this is so? Because this is the penal rate of interest, right? That is why it is placed 25 basis points above the policy rate. And it also involves pledging SLR portfolio up to a predefined limit, 2%, right? So here it also involves pledging of SLR portfolio. We have already discussed about the statutory liquidity ratio, which involves cash, gold, and government securities. So this process of marginal standing facility also involves pledging of SLR portfolio up to a predefined limit of 2%. Now, the most important question comes here, that how RBI uses MSF, and how by using the MSF RBI achieving the ultimate objective of monetary policy. What are the objectives that we have discussed? Maintaining price stability in the economy and ensuring economic growth in the economy. So let's discuss both the cases one by one, right? So for example, let's discuss first case, that is suppose RBI is seeing that there is a high inflation in the economy. RBI is seeing that there is a high inflation in the economy. Then what RBI will do in the case of high inflation? RBI will increase the MSF. RBI will increase the MSF, right? What will happen after increasing the MSF? I told you in the previous sessions as well. Whenever there is a high inflation in the economy, so first step that RBI will take is to reduce the money supply in the economy, right? This we have already discussed. So in the case of this also, inflation, whenever RBI feels that there is a high inflation in the economy, so what RBI will do? RBI will increase the marginal standing facility rate. What will happen after increasing the MSF rate? The money supply is basically will come down in the economy. Money supply will be less. Why this is so? Because suppose earlier RBI was saying that earlier RBI was charging around 5% as the MSF rate, but later on RBI has increased it to 7%. Now it is costly for the commercial banks to borrow the money from the Reserve Bank of India. Reason being, now they have increased the MSF rate to 7%, which means if they are borrowing the money at the cost of 7%, so what will they charge from their customer? They definitely have to charge 12 to 13%, and which is very costly. So being a middle class customer, being belong to the middle class society, we will not take the loan of 12 to 13%. Rather we would wait for some few couple of months, so that we can wait for interest rate to come down, right? So this is how money supply will less in the economy. Reason being, now banks will not go for the option of MSF, and if they are not going for the option of MSF, then in that case what will happen? Money supply will reduce in the economy, right? Which in turn basically increase the interest rate in the economy. Why this is so? Because when money supply is limited, then definitely bank will give the loan to them, those who can afford the higher interest rate in the economy, right? So interest rate will increase, which will reduce the demand, because if the interest rate is high, then what will happen? You will not purchase iPhone, you will not purchase home, you will not purchase bike, you will not purchase car, whatever things you want to purchase on loan, you will not purchase, right? So which means demand will be less in the economy, and when demand will be less, prices will come down, which is the completion, which is the achieving of first objective, that is maintaining price stability. So whenever there is a high inflation in the economy, RBI increases the MSF, which leads to decrease in money supply, which again leads to increase in interest rate. In the consequence of that, demand is decreasing in the economy and prices is also decreasing in the economy. So this is how the whole mechanism of MSF works. So this is the first scenario. Second scenario is whenever RBI is focusing on the economic growth, right? When RBI is focusing on the economic growth, so what will happen? RBI will reduce the marginal standing facility rate. So what will happen after reducing the marginal standing facility rate? Suppose RBI is saying now you can take loan under the MSF rate at 3%. Under the MSF marginal standing facility, commercial banks can take loan at 3%. Suppose RBI announces this and RBI has reduced the MSF rate at 3%. Then what will happen? Banks will be motivated to take loan from the Reserve Bank of India, right? Because they are getting the loan at 3%, which is very cheaper, you can say. And in turn, they can give the same loan to the public at 7 to 8%, which means now money supply is increasing in the economy. So whenever RBI is focusing on economic growth, what RBI will do? RBI will reduce the marginal standing facility rate, which in turn lead to increase in money supply in the economy, which in turn leads to decrease in interest rates in the economy. Why this? So if money supply is excess, then definitely if demand is less, supply is more, then definitely interest rate will come down, right? So this is a common principle of economics. I hope you are getting it. So interest rate will come down in the economy, and once interest rate is coming down in the economy, then what will happen? Demand will increase. Why? Because now we will go to bank to take loan to purchase house, to purchase car, bike, iPhone and whatnot. Why? Because we are getting cheaper loan. We are getting loan at 7 to 8%, which we were getting at earlier 12 to 13%. Now we are getting the same loan at 6 to 7%. Definitely we will fulfill our demand. So we will increase the demand in the economy. And when demand is increasing in the economy, then definitely in order to cater that demand, production has to be increased in the economy, because ultimately producer will increase the production because they are getting more profit in that, right? So when demand is increasing in the economy, so in order to cater that demand, production has to be increased in the economy. And when production is increasing in the economy, which means GDP is increasing, right? GDP is increasing, and which in turn leads to economic growth. Economic growth is what? That is increase in GDP. So this is how the overall mechanism of marginal standing facility works. Got it? So this is how RBI uses the marginal standing facility for both the purpose, inflation as well as economic growth. I hope you are getting it. Second important tool is that standing deposit facility, right? So what is the standing deposit facility? So for that, I would like to revise the concept of reverse repo first, that we have discussed in yesterday's sessions. Reverse repo, right? So here you can see the reverse repo. Then what is the process of reverse repo? On one hand, two participants are there, Reserve Bank of India and the Punjab National Bank. This we have discussed, right? Now Punjab National Bank is having extra cash. Then what they will do? They will deposit the cash with the Reserve Bank of India, and in turn what they will do? RBI will give interest on the amount deposited on the parking of the funds. RBI will pay interest to the Punjab National Bank, and also along with that RBI will keep government security as a collateral. So in the repo operation, it is the responsibility of Punjab National Bank to keep government security as a collateral, and in the reverse repo rate, it is the responsibility of Reserve Bank of India, since it is depositing, it is accepting the cash from the Punjab National Bank. So now it is the responsibility of Reserve Bank of India to basically keep government security as a collateral, right? So this is the reverse repo. But if I tell you about the SDF, that is standing deposit facility, so entire process is same except the one thing. So here you can see two participants are again Punjab National Bank and the Reserve Bank of India. Punjab National Bank is having the extra cash which they are not giving to someone. So they are thinking, let keep this cash with the Reserve Bank of India so that we can earn interest on that. So our Punjab National Bank will keep the cash with the Reserve Bank of India. Reserve Bank of India has to pay interest on that, which is known as SDF rate. That is the standing deposit facility rate, right? But here collateralization is not involved. Here in the case of reverse repo, we have seen that government securities has to be kept as a collateral with the Punjab National Bank by the Reserve Bank of India. But in the process of standing deposit facility, there is no collateral involved. So this is the major difference between the SDF and the reverse repo rate. So standing deposit facility is basically rate at which RBI accepts uncollateralized deposits, right? In the case of reverse repo rate, it is a collateralized deposit, but in the case of standing deposit facility, it is an uncollateralized deposit, and it is always placed at 25 basis points below the policy repo rate. In the case of marginal standing facility, we have seen that it is placed at 25 basis above the policy repo rate. So if I tell you about the repo rate, suppose is 6%, so SDF will be 5.75% since it is placed 25 basis points below the policy repo rate, and MSFs shall be basically here 6.25%, that is above the 25 basis points above the policy repo rate, right? This is what we have seen. And one very important thing is that SDF standing deposit facility has replaced the fixed reverse repo rate, right? So whatever we have seen with respect to the fixed reverse repo rate, so SDF has replaced the fixed reverse repo rate. Now RBI is not supposed to keep the collateral with the commercial banks in order to accepting deposits from the commercial banks. So this is with respect to the standing deposit facility. Now the important question is that how RBI uses the standing deposit facility, how Reserve Bank of India uses the standing deposit facility in order to achieve the ultimate objectives, which we have seen two major objectives are there of monetary policy, that is maintaining price stability in the economy, and second is ensuring economic growth in the economy, right? So how SDF is used by the Reserve Bank of India, let's discuss that. So suppose RBI is feeling that there is a high inflation in the economy. So in the case of high inflation in the economy, what will happen here? How RBI will be used by, SDF will be used by the Reserve Bank of India. So Reserve Bank of India what will do? First of all, if there is a high inflation in the economy, then Reserve Bank of India will decrease the money supply. Right? This is what I told you basically, whenever there is a high inflation in the economy, so RBI will decrease the money supply, and how with the help of SDF, money supply will be decreased. So RBI will increase the standing deposit facility rate, right? So SDF rate will be increased by the Reserve Bank of India. Suppose earlier SDF was suppose 5%. So now RBI will say that now it is 7%. It is 7%. So इसके क्या फायदे हो सकते हैं? देखिए यहाँ पे बेसिकली क्या है, अर्लियर द एसडीएफ रेट वाज 5%, नाउ एसडीएफ रेट इज 7%. सो बैंक विल बी मोटिवेटेड टू कीप देयर फंड, कीप देयर मनी विद द रिजर्व बैंक ऑफ इंडिया ओनली. रीजन बीइंग देयर मनी इज entirely safe. They are not supposed to call to Reserve Bank of India even once for the interest rate. But if they are giving the same money to the public at 8% or 9%, you can say, then definitely there is a high probability of default. They have to track multiple times, they have to take follow up multiple times, right? So it is beneficial for the commercial banks to keep their money with the Reserve Bank of India. Reason being their entire money is safe, and there is a very little difference between the money that they are keeping with the Reserve Bank of India and the money that they are giving to the public. So RBI will increase the SDF, that is the standing deposit facility. Then what will happen in order to, when RBI will increase the SDF, so what will happen? Commercial banks will be motivated to keep their money with the Reserve Bank of India. And once they are keeping their money, once they are depositing their money with the Reserve Bank of India, then money supply will less in the economy. Why? Because they have a limited money. And if they are depositing the same with the Reserve Bank of India, then they are having the less money, which means money supply is decreasing in the economy, which will lead to increase in the interest rate. क्योंकि जो भी लिमिटेड पैसा बचा है, अब आरबीआई, अब पंजाब नेशनल बैंक किसको देगी? जो ज्यादा इंटरेस्ट रेट पे करेंगे, which means मनी सप्लाई कम हो गई तो इंटरेस्ट रेट विल बी हाई इन द इकोनॉमी. इफ इंटरेस्ट रेट इज इंक्रीजिंग द इकोनॉमी, देन डिमांड विल बी कमिंग डाउन इन द इकोनॉमी. डिमांड कम हो जाएगी. व्हाई? बिकॉज अब यहाँ पे पैसे नहीं, इंटरेस्ट रेट ज्यादा है. अगर इकोनॉमी में यू हैव टू pay 12-13% interest rate for the iPhone, for home, for purchasing of home, for purchasing of car, for purchasing of bike, then definitely you can procrastinate your plan, right? So demand will decrease in the economy, and which will lead to decrease in the prices in the economy, and with that is nothing but maintaining price stability or controlling inflation in the economy. So this is how RBI achieves the first objective of monetary policy, that is maintaining price stability. Second is ensuring economic growth. This is the second major objective of the monetary policy. So how with the help of standing deposit facility, RBI will focus on the economic growth. So what will happen here? RBI will decrease the standing deposit facility rate. RBI will decrease the standing deposit facility rate, because if RBI wants to focus on increase in the production in the economy, then how production will be increased? When there is a demand, then only production will increase. Without demand, there is no chance that the production will increase, right? So in order to increase the production, definitely there must be a demand. And लोग डिमांड कब करेंगे? जब उनके पास पैसा होगा. ठीक है, अगर आपके पास पैसे नहीं तो आप डिमांड नहीं करेंगे. तो पैसा कैसे पहुंचाना है? चीपर इंटरेस्ट रेट के साथ. So when people will demand, then production will increase. But people demand कब करेंगे? When they have easy access to money, which means there must be a lower, cheaper interest rate in the economy. Then only people will demand more, right? So with the help of standing deposit facility, how RBI will focus on economic growth? So RBI will reduce the standing deposit facility rate. Suppose RBI is saying now SDF is 2%. So now banks are not enough motivated. Banks will say कि 2% के लिए RBI के पास पैसे क्यों रखने हैं? Let's give the money to the public. अगर हम पब्लिक को 6-7% पर भी देंगे तो हमारा बहुत फायदा हो रहा है. And easily 6-7% पे you can take the loan, right? Because earlier it was 12-13%. But now since it is 6-7%, then definitely we would focus on taking loan, right? So decrease in standing deposit facility is there, then which will lead to increase in money supply, क्योंकि अब बैंक के पास जो पैसे हैं that they will give to the public. So there is the increase in the money supply which will lead to decrease in the interest rates in the economy. क्यों? क्योंकि अगर मनी सप्लाई ज्यादा है, बैंक्स अपने पास तो रखेगी नहीं, बैंक्स लोन में ही देगी किसी ना किसी को. तो अगर यहाँ पे बैंक्स को लोन देना है तो इंटरेस्ट रेट डेफिनेटली कम करने पड़ेंगे. एंड इफ इंटरेस्ट रेट इज कमिंग डाउन इन द इकोनॉमी, देन डेफिनेटली डिमांड विल इंक्रीज इन द इकोनॉमी. क्यों? अगर डिमांड यहाँ पे बढ़ेगी, अगर इंटरेस्ट रेट कम है तो एवरीवन विल वांट टू फुलफिल देयर ड्रीम. सभी चाहेंगे, जो कार बाइक परचेज करना चाहते थे, आईफोन परचेज करना चाहते थे, राइट? सिमिलरली जो लोग घर परचेज करना चाहते थे वो लोग डिमांड करेंगे. एंड इन ऑर्डर टू फुलफिल दिस डिमांड, प्रोडक्शन हैज टू बी इंक्रीज इन द इकोनॉमी. प्रोडक्शन यहाँ पे बढ़ाना पड़ेगा. एंड द प्रोडक्शन इज इंक्रीजिंग इन द इकोनॉमी विच इज नथिंग बट द इंक्रीज इन जीडीपी, एंड दैट इज द इकोनॉमिक ग्रोथ इन द इकोनॉमी. सो दिस इज हाउ आरबीआई यूजेस बोथ. दिस इज हाउ आरबीआई यूजेस standing deposit facility in the case of high inflation, and also RBI uses standing deposit facility in case of economic growth. So whenever RBI wants to achieve this objective, based on this RBI uses the standing deposit facility. Guys, one very important thing that you have to remember, that RBI has different weapons in the form of CRR, SLR, repo rate, reverse repo rate, MSF, SDF. If RBI wants, RBI can use all of them simultaneously. If RBI wants, RBI can use some of them simultaneously. And if RBI wants, it can use any of them simultaneously. So that is completely the call of Reserve Bank of India, right? वो उनकी call है, but these all are the weapons that are available with the Reserve Bank of India. Got it? So this is how RBI uses the standing deposit facility in both the cases for achieving the objectives of monetary policy. ठीक है? I hope you are getting it. So this is with respect to the marginal standing facility and how RBI uses it, and this is with respect to the standing deposit facility and how RBI uses it. Ultimately, whatever steps RBI is taking, that you have to remember that RBI is taking, keeping in mind that they have to achieve two major objectives: maintaining price stability in the economy, as well as focus on the economic growth in the economy. These are the two objectives that RBI has always back of their mind, right? And friends, this is all with respect to today's session. And friends, we are running September Scholar, which is valid till 14th of September. तो यहाँ पर as a part of this offer, guys, you can avail RBI Grade B 2025 लक्ष्य बैच 65% plus 45% ऑफ यहाँ पर आप ले सकते हैं on the RBI Grade B 2025 लक्ष्य बैच. And you know very well that we have started the लक्ष्य बैच. The classes have already started from 2nd of September. तो phase 1 की अभी हुई है, phase 2 की classes is about to start very soon. You can check the schedule by visiting testbook.com, and also the link of the course is given in the description of this video. You can check the same. And also, guys, you can use the coupon code Prakash, which is my name, and that will also work as a coupon code. So after applying this coupon code, you can see a drastic discount on the final prices. And as a part of this offer, you can get 12 plus 4-month subscription. This is very important. You will get 16 month subscription, and in order to further reduce the price, you can use the coupon code Prakash. So this is valid till 14th of September. So if you want to avail the course, guys, do subscribe the course. Link is given in the description of this particular video. And friends, we are about to launch a free RBI Grade B 2024 crash course, phase 2 crash course. So those who are appearing for phase 2 this year, or those who are planning to appear next year, guys, you can also attend the course. This is going to be very beneficial for the preparation of finance, management, and economic and social issues component. So we would be covering all the important topics in a very less amount of time, right? So you can join this particular course also, which is completely a free initiative from our side. So we are about to inform you very soon with respect to the how classes will be there as a part of this course. And friends, this is my coupon code. You can see Prakash. So whatever course you are subscribing on Testbook platform, you can use the coupon code Prakash. and you can see after that drastic discount in the prices, so which will make the course more affordable for you. And this is my Telegram group. Do join this Telegram group. This is very beneficial for you, because in the Telegram group you can directly connect with me. Whatever doubt you have with respect to the content, whatever doubt you have with respect to the strategy, you can directly post in the group, and I'll personally be resolving that. And also I would be sharing some important updates with respect to the sessions, with respect to the exam notifications, so that you can also be aware of that. So there is a huge benefits of joining this particular group. So join the particular group, and also you can check the details of the course by accessing the link that is given in the description box below. And also in the description box, friends, we have provided you a Google form. So if you have any doubts with respect to the RBI Grade B examination, you can fill that Google form, and our team will get back to you. So thank you very much for joining the session. I hope you enjoyed the session and you have learned about the marginal standing facility and the standing deposit facility. And friends, daily at 3 p.m. we are having the master class, right? That will not be on the YouTube platform, that will be on our app. So you have to join that masterclass also, where we are also discussing some important concepts of ESI, which is very, very important for the examination. So thank you very much for joining the session. Have a good day and happy learning, guys.